Okay. And then finally, the virtually driving for storage. I'm going to show y'all how I do this, but essentially all I do is I just go onto Google Maps. All right. And then I just search, right, storage. Okay, now real fast, before we go on to Google Maps. Okay, so Marshall is asking, how do you get the list of owners to cold call? That is what I'm going to show you right now. Okay, so that's what I'm going to show you. Okay, so before we go on to Google Maps, what I want to do real fast is I want to show you guys just the difference. Do you guys know this, right? I don't know. You'll tell me if you know this or not. The difference between primary, secondary, and tertiary markets. Okay. And before you really start getting into, anything with storage, you have to understand these three different types of markets. And this is really just commercial real estate in general, the commercial market. Okay. And I just draw it like this is kind of what I do. Okay. So this is the primary market. This is the secondary. And this is tertiary. Okay. So primary would be like, like Nashville, right? Nashville is like a primary market, right? If you go onto Google Maps and you search like storage near me, all right, and you see that when storage near you is like, if you're living in like a major metropolitan area, you're going to see like the REITs, right? Primary is like REITs. Primary is like U-Haul, Public Storage, Extra Space, all these big players. Okay. And and typically those properties are like super expensive. And I really don't look in primary markets unless you can afford like 3 million plus facilities. Okay. If you can afford 3 million plus facilities, maybe there's a market out there that you can look in. But if you can't afford $3 million, then you should be looking to either secondary or tertiary. So primary, right, is 3 million. That's a 3 million plus. Okay. And population is like super important. Population is really important as well too. Population of primary markets is like greater than is that a less than or a greater than 250,000? I never learned that in school. Okay. And is that less than or greater than? Somebody tell me. And so you want to do a population of like, you'll just know that like when you're Googling population of Nashville and it's saying like, whatever it is, 1 million people, 1 million, you just know that's a primary market, right? And then what I do is I look now so I'm in this range. I'm in what I call subprimary market. All right. The subprimary market is kind of in between secondary and primary. And this population is called, I call it the subprimary market. Okay, so subprimary is the population is going to be, all right, less than 250. So probably around like, let's say 150K to above 250, to above two. Yeah. Okay, so anyways, 150 and up. Okay, so subprimary is like 150,000 to 250,000, right? And primary is like 250,000 plus. Okay. And then you have secondary markets. Secondary market, and secondary market is, and the price range for subprimary is going to be like I would say 2 million plus. 2 million plus. Okay, for subprimary. Maybe more. It's a lot. Sometimes it's even more, right? But it's going to be more expensive. And then secondary is Secondary population would be like, let me see. I would say like 75,000 to 150K population. Okay. And then the price range is going to be like a 1 to 3 million. Okay. And then you have what's called subsecondary. And these are all cities. All right. So primary market, these are all cities with populations. Okay. Just so you know, this is Nashville. And then subprimary is going to be the suburbs of Nashville. Right. And then secondary is going to be Clarksville. So we're buying a facility in Clarksville, Tennessee right now. That is a secondary market. Okay. And then subsecondary would be like a suburb of the secondary market. All right. And the secondary market, the subsecondary market is going to be 25 to 75K population. And then also the price is going to be like maybe 500K to 1.5 million. Okay. Subsecond. You see kind of how I'm working it? I'm going down, right? Each market I'm going down. And then you have the tertiary market. Tertiary market just means country, right? Country. So then you have two different types of country markets. You have the 25K or less, and you have the 5K or less populations. Okay, 5K is like probably, it's, a couple 100,000, less than 300K, right? And this is going to be anywhere from like, let's say 700K to, to 300K, something like this. Okay, and this is like less than 300K, so little tiny facilities. All right. So now you kind of have this idea. So you're asking yourself, what can I afford to buy? Right? You're reverse engineering where you should be looking. There's no reason for you to be looking in a primary market if you can't afford $3 million. There's no reason for you to even be looking in a secondary market unless you can afford, $1 million. If you can't afford that, there's nothing wrong with it. You're just looking in a different market. You're looking in tertiary markets. And what's so funny is that, back in the day, like all these main players, they were all like primary market. And then like primary markets started to get oversaturated. So now you're seeing a lot of like primary markets coming into secondary markets.